On, guys? Welcome to Stock Talk with Nico Criticos. Today, we are going to be doing some stock analysis for Celsius stock. This is a small position of mine, which I purposely made it small because this stock is very volatile. And with that being said, I am still bullish on this stock over the next couple of years. I think they have a strong positioning in the energy drink space, and I believe they're in third place after Monster and after Red Bull. So I think they have 12% market share, which is kind of like, especially with the way they're growing, I just think they're in a really good position to keep capturing market share. And that's why I think their sales should be growing and outpacing a company like Red Bull or Monster. They also, a couple weeks ago, I believe they acquired Alani energy drink, which again is going to help their business even more. And as of 2 days ago, it looks like the stock went up because they are expanding their distribution to Europe in Belgium and Luxembourg, which is interesting because, again, it's just more. It says the expansion follows successful launches in Australia, France, Ireland, New Zealand, and the UK. So, again, median price target is $40. I just think, and that's from 21 different analysts. So, I just think they're in a good position. Is the stock a buy right now? Maybe. Probably long term it is. But I mean, I started buying at 27. I believe it went much lower than that too. I think, let's see, it was as low as a $21 stock. So, part of me, I'm up 14%, which is not a lot, but it still is. I'm definitely paying a premium relative to where I initially bought the shares. So it's not like it's a super good deal right now, but it is still interesting, and it's probably going to be a $40 or $50 stock in a year from now. But let's get into some of the financials here. So EPS a year ago, 0.7. This year is expected to be 0.96, next year 1.18, and then revenue is expected to grow 30% this year and then 16% next year, which is a big drop off. But really, with some of the news that is coming out, like this expanding into other countries, and they just acquired Alani, I think they're probably going to beat these numbers. I think they're probably going to grow over 30% this year and then more like 20% next year. So I think those numbers are kind of being too conservative. If we get into the numbers here on Qualtrim, we could see revenue has just been exploding these last couple years. 2024, they did $1.3 billion of revenue. Keep in mind, this is a $7.3 billion company. And then for the P ratio for the next 12 months, we're paying 33 times earnings, which that's to be expected, honestly. That's a fair valuation. I mean, you look at where the stock was a year ago, and yeah, when the stock is trading at what, uh, you know, 60, $70 plus, then yeah, I think that's a bit overvalued, right? That's kind of too much risk there for me. I mean, yeah, it was as high as a $96 stock. So in my opinion, that's kind of ridiculous. But now, I mean, all that has been sold out of the stock. As you can see, all the sellers have pushed us down. It's been sitting at this 25, $30 range for a long time now, going back to September of last year. So that's what, 6 months ago, it's been sitting at this $30 point. And that's why, yeah, I mean, I honestly might buy more shares. If it dipped down to closer to my cost basis, I definitely would be a lot more eager to buy. But even at today's price, it still is not a bad buy from my perspective. Let's go down here and take a look at net income. Net income is not the greatest chart, right? They haven't been profitable that long. 2024 sales dipped to 145 million, but you just got to think they're growing, they're expanding. There's costs that come with that, and that just is part of the story. Free cash flow is looking good though. Free cash flow has been straight up the last 4 years, which is nice. The cash to debt ratio is phenomenal. Roughly 900 million in cash with zero debt. That's phenomenal. Shares outstanding actually dropped off big time from 23 to 24, which is surprising for a company like this. And I guess you could look at it like they became profitable in 23. So that kind of makes sense. They stopped diluting shareholders. They actually bought back shares, helped out the stock price. So that's kind of the way I'm looking at this. I think it's an interest now. With brands like this, it's easy for them to fall off, right? It's a game of where one day one brand is huge, the next day it's a different brand. So that's why I consider this a risky investment, especially compared to a lot of other companies. Like if I'm buying Amazon or Meta or something like that. But all in all, I think this is a nice growth stock at a fair valuation right now, with definitely some potential to make whatever, 30%, 40% returns over a 12-month span. So that is my analysis for Celsius. Let me know what you guys think down below, and I will see you in the next video.